very pleased to invite Alex Dorsch, Managing Director and CEO at Chalice Mining, to the stage. By way of background, Alex joined Chalice in 2017 and was appointed Managing Director in late 2018. Since then, Alex has led the company from discovery through to project development at its flagship WA-based Palladium nickel copper project. Alex has a diverse experience across the resources sector as a management consultant, engineer, project manager and corporate advisor. Prior to joining Chalice, Alex was working with the global management consultancy McKinsey and commenced his career in engineering with BHP. Alex holds a Bachelor of Mechanical Engineering with first class honours and a Bachelor of Finance from the University of Adelaide. Thanks very much, Alex.
Thanks, Christian, and good afternoon, everyone. So today, giving you an update on Chalice and who are developing, as it says there, the leading palladium nickel copper project in the Western world, right here in good old WA. So we have, I guess, one of the higher profile critical minerals projects in WA, certainly one of the largest resource or undeveloped resources in all of WA. It's a world-class deposit, 17 million ounces of PGEs, 960,000 tonnes of nickel and 540,000 tonnes of copper in resource. And it's in a single open pit. It's a pretty spectacular discovery back in 2020. We've spent about $225 million since then, sort of understanding it, defining it. And we think now we've got a pretty straightforward development pathway. We've spent the last 2 years in a pretty tough market condition, redesigning the flow sheet and solving a lot of our metallurgical problems. And we've adapted the project just by scaling it down slightly to adapt to lower commodity prices. We've got all our approvals well and truly underway, and we've got sort of the real estate as well on top of the deposit, as well as in all directions. So we've got a huge exploration package as well, 7,000 square kilometres in the West Yilgarn. We started with about a staking exercise of about 11,000 square k's. We've screened about 4, so 7,000 left. There's about 50 targets to drill over that package, which I'll talk to a bit later. Financially strong company. Obviously, you can't do development, you can't do exploration without having a balance sheet. So 78 million cash and listed investments. Fantastic, strong position to be. And we're very fortunate. We've held about 15 of our top 20 institutional holders, through what was a pretty tough low in the commodity cycle. We've got a team, obviously led by myself, but a group of people absolutely passionate about, making another discovery and also developing Gonville into a world-class producing asset. And it's a bargain at the moment. So the investment opportunity, which I'll talk to, is that you're basically paying $21 per ounce of metal in the ground, excluding any value from nickel, copper, and cobalt. And prices of PGMs are on the rise. So palladium's back at about $1,200 US an ounce, and platinum has hit a 10-year high of about $1,500 US an ounce. So I won't talk to this, but market cap today around about 650. So yeah, you're paying effectively the enterprise value about double what we've spent on the project. So you get a pretty cheap discovery at the moment in the market. Probably the newest and more prominent shareholder on our register is Paradise, Adam Harvey, in the small cap fund, which is fantastic. And it's a well researched and highly liquid stock. Last couple of months or last 3 months have been fantastic, where the stock's up about 2 times in that space. And what's triggered that really is as simple as the palladium price. So palladium is this very obscure small metal, about 9 million ounces a year. And it's one of these metals that goes into absolute rapid sort of price rise and price hike, price drop. Very, very hyper-cyclical metal. And what we're seeing at the moment, which makes this such a compelling sort of leveraged opportunity, is that palladium's on the way up. But we're still not at the marginal cost of supply just yet. So we need about $1,450 to keep the Stillwater asset of Sibanye-Stillwater in operation. So the price today at $1,200 is still deep in the cost curve. We've seen 2 mines curtail. We've seen Stillwater cut their production by about 50%. I've also seen Lake Dazil in North America, basically the only sort of non-Russian, non-South African supply has basically been curtailed. So we've got a situation where sort of every automobile, or 85% of the world's automobiles that are sold, contain palladium, and sort of 85% of that palladium comes out of Russia and South Africa, and that's going up every day. And the South Africans in particular have made almost zero effort in actually reinvesting into these very, very deep mines of the Bushveld complex. So expect to see continued shrinkage of their output. Just recently, Valterra missed their half-year production guidance by 22%. So this is an incredibly tight and rapidly getting tighter market. And basically the demand profile is massively underestimated. So basically consumers are saying very clearly we still want an engine in our electric vehicle. So you're seeing a hybrid, either a series hybrid or a parallel hybrid, and that's going to basically underpin effectively a robust sort of demand profile for palladium for a very long time. We've seen speculators close their short positions. They had about 1 million ounces short in a 9 million ounce a year market. So they've effectively closed those and sort of looking like they're going long on the metal, which is obviously a fantastic indication. I mentioned hybrids. I guess, palladium is very, very simple. If you believe hybrids are the sort of the medium or longer term solution to electrification, then palladium's in a fantastic position as an investment. So internal combustion, not only requiring stricter emissions standards over time, which just means that the catalyst and the amount of palladium you need in every vehicle just goes up and up over time. That is offsetting any demand destruction that we're seeing through pure battery electric vehicles. So I think it really does mean for the next 10 to 20 years, we've got a very, very solid demand profile for this critical mineral. And supply, if demand's quite simple, supply is almost a story of sort of a sad industry that's just been depleted of capital. But yet on the left-hand side, you can see primary supply. Every year, analysts in the dotted lines assume that the supply grows, and basically every year supply actually declines. And we've sort of seen about a 15% drop in overall PGE output from mines in the last 3 years. And recycling is the same story. Every year the analysts think that recycling is going to magically grow at sort of 10 to 20% CAGR, and basically every year recycling basically goes down or remains flat. So this is like I said, a rapidly tightening market and a very, very poorly understood market. So it sort of provides opportunity. And if you look at the price chart for palladium over the last 7 years, this is sort of where you get very excited as a commodities speculator, because you can see sort of almost a repeat happening of 2018, 2019, and maybe just the early indications of the price lifting off a low of about $1,000 an ounce, where it's been for the last 2 years. And you see last cycle, it went over $3,400 an ounce, and our share price peaked at over $10 a share on the back of that. Russia then started dumping into the market, started selling all the palladium through China. That basically depleted all the liquidity on Western markets, and we saw prices come back all the way down to 900 or 1,000. But the really important part here is if you like sort of commodity investing, it's important to have a commodity where if you go into incentive pricing, there's no actual elasticity of supply. There's no actually new assets or new producing assets that come online to meet the demand. So you see this price action stay in incentive pricing for many, many years, and we can see exactly the same conditions sort of coming again in the windshield. And that's meant just in the last few months, our stock, like I said, about 100% up, whilst the underlying spot price of palladium up about 40%. And there's really just no other asset that's worth owning in palladium. Obviously, 50% of the value of our resource is palladium, so we're not only exposed to palladium, but there's just no other option to that in terms of investment grade or institutional grade. So that I guess is the market, and that makes us all very, very excited to hopefully see palladium sort of north of $3,000 again. I think there is absolutely a realistic chance that it does, just given a look at the fundamentals and just how rapidly declining the supply side is, whilst, as I said, everyone continues to buy hybrid vehicles. So our asset just outside of Perth, we're going to be a long life, very, very low cost asset. And the reason we're going to be a low cost sort of second quartile asset is because we've got a very, very simple flow sheet, and we basically start digging mineralisation and high grade from surface. So we've got a singular open pit. We don't have any pre-strip. We don't have any massive infrastructure capital. We just basically get into the highest grade of the resource from the get-go. So we expect our costs to be very, very minimal, or almost negated by byproduct credits in the early years. as we get into sort of year 10, 20, we expect to sort of sit, like I said, safely in the second quartile between Russia and South Africa. And we've done a lot, as I said, in the last 2 years to really sort of recut the project and stage the capital out, so we don't have a plus $1.5 billion capital hurdle anymore. We've got a sub $1 billion hurdle, and so that recut means we are now incentivized at much, much lower prices, and we can get into the industry at lower prices, and we think at the bottom of the cycle, sort of effectively where we are. So we've made an investment in this project, $225 million, as I said, since the discovery. We drilled about 300,000 metres of drilling. We bought the farmland for about $50 million. We've got the team in place now. We've got a COO, Dan Brearley, who's come to us from Evolution. We've got the key sort of development people involved. Obviously, this is a big bulk open pit project with now a very, very simple flow sheet. So we've made, I guess, probably the most game-changing aspect of the last 2 years for the company was basically removing the need for a hydrometallurgical circuit. And we only needed that hydrometallurgical circuit because we couldn't upgrade nickel to be a saleable product. About 6 months ago, we cracked that one, and we finally got flotation alone to get us to a saleable nickel con. So that takes out a lot of cost, a lot of complexity. We're going to finalise our numbers in the fourth quarter of this year with a PFS. I think that's going to be a pretty foundational, big milestone for the company in terms of resetting people's understanding of the asset. And then next year we're going to move into offtake and obviously our full form approvals submissions ahead of a targeted FID in 2027. So I probably don't need to speak to this too much, but this is an absolute beast of a resource, 660 million tonnes, largely open pittable. We will probably get to a depth of around 400 metres after 20 years of mining here, and there will still be probably 2/3 of the resource sitting underneath us. So it's a very, very well understood resource, huge scale, very, very unique in terms of leverage to movements in the commodity prices. And that metallurgical breakthrough, really what made it so compelling, and I guess the market was up about, the share price was up about 30% on that day, is that basically all the challenges that we were getting hit by over the last, over sort of the 2023-24 period revolved around not being able to sort of get to a saleable nickel concentrate with flotation. Earlier this year, like I said, suddenly we got the float to generate us a plus 8% nickel con, which is saleable to a nickel smelter. We've got a fantastic rich copper con, about 20% copper, 45 to 60 grams of PGEs in it. And then we've got another byproduct we've added as well just in the last few months. We're going to make some very small volumes but high grade magnetite iron ore as well, in a similar manner to the way the Bushveld produces chromite as a byproduct. And then once you're through sort of the flotation and the mag separation, you basically blend the oxide together with the float tails and you go through a CIL plant. So it is effectively a gold plant bolted onto a standard concentrator with a sequential flotation configuration. And we're getting great recoveries and it's across the full grade spectrum. So we know now about $15 million of investment has gone into this. We've proven across the grade range that this is going to work and we're going to get saleable concentrates and achieve those recoveries there. So we're in a great position. Obviously we need to sort of land that study in the market in November. Hopefully Palladium keeps trending the right way for us. We're moving into offtake financing discussions next year, and we'll make our environmental submissions, state and federal, in the middle of 2026. We've done a lot of de-risking there, obviously by acquiring the farmland. We own a lot of real estate in that part of the world, and targeting an FID, as it says there, late 2027. We've also got major and strategic project status from the state and federal government. So we've got every bit of government support here to bring Australia into the market as a PGE producing country. And then the exploration side of our business, obviously, 2/3 of our effort sort of goes into the development of Gonville, the studies, the metallurgy, but we still have the same core team of geologists focused on the western side of the Yilgarn. So obviously finding Gonville right on the western edge of the Yilgarn was a bit of a game changer. We see now basically a lot of new discoveries, particularly in orogenic gold, sort of happening in these higher metamorphic grade terrains. and we're seeing sort of areas, huge areas of undrilled sort of new greenstone belts in the western side of WA. So we're very excited about the potential for gold. We have tested a number of targets looking for sort of Gonville-like magmatic nickel copper PG targets. We haven't found too much just yet, but the focus is on absolutely trying to find a prize like a Boddington, like a hydrothermal gold copper system, sort of with porphyry characteristics. Really the world is our oyster here on the western side of WA, because effectively no one has done really any material work in that part of WA at all. So we're going to be air core drilling again in about a month's time on some very exciting targets. This one's just about 40 kilometres northeast of Gonville. This is a 7 kilometre long gold in soil anomaly right on the terrain boundary between the southwest and the you and me terrains. So big sort of crustal scale feature. There's some very interesting high-grade, historic workings just sort of to the north there, about 3 kilometres away. And we drilled actually some plates here a little while ago, and we actually hit some gold when we were sort of aiming for nickel. So one of those serendipitous sort of opportunities here, hopefully to show that this is a fertile structure for a significant scale gold system. And that anomaly, that soil anomaly, is still open as well. So we've got more work to do to really get in there and drill lots and lots of air core into it. Then the Barra project, so this is north of Gonville. This is sort of west of the deflector operation, the Gullowa Greenstone Belt. Again, all that green area there was incorrectly mapped as granite gneissic terrain by the Geological Survey, and that's just because they didn't see any outcrop and they didn't see anything on the geophysics, which gave an indication of sort of these mafic greenstone packages. So very, very limited drilling ever over a 3,500 square kilometre area, less than 500 drill holes, and something like 400 and something of those have been us. So we've tested a number of things. We've got a lot of drilling to do here. We've already got sort of what looks like the beginnings of a discovery, we hope, at Warspite. And we've got 8 metres at 1.2 grams gold to end of hole. So there's about 3 or 4 targets there that we think can deliver a sizable new gold deposit in these sort of high metamorphic terrains. So the reason to own Chalice is pretty simple. If you think sort of palladium as this sort of overly sort of bearish thematic around the metal, and you think hybrids are going to stay around for longer, you think internal combustion is going to stay around for longer. In the absence of a very steep drop in electricity prices, we certainly think oil and internal combustion is going to be here for a very, very long time. And that's going to mean palladium is going to stay in this very, very tight market deficit type condition. So we are positioned with basically the only credible development project in palladium worldwide outside of Russia and South Africa. We've got our approvals on the way, the PFS, like I said, in November. And the exploration drilling sort of gives you a bit of upside that's not really priced into the stock. So, Gonville is obviously priced in, and the value expected future cash flows of Gonville are sort of, what the market uses to price Chalice. But you could argue that basically there's nil value being ascribed to one of the largest and more active, exploration packages for gold in WA at the moment. So you're getting a nice sort of cheap entry point at this part of the cycle, and certainly looking forward to seeing the rest of the year in terms of getting the pre-feasibility out in a rising price environment. Thank you.
Thanks very much for that, Alex. We've probably got time for one question from the audience if anyone would like to raise their hand. If not, we'll leave it there. Thanks again, Alex.